Hello friends, James Stevenson back with part 15 in my Tesla earnings forecast video review series. This is the one where we talk about the income statement, what this has all been building up to. So why do you make a forecast in the first place? It's to get to an income statement that you can compare against the one Tesla reports and see how good a job you did forecasting. So the first rule of forecasting is whatever you forecast, it will be wrong. You just don't know by how much and in which direction. You hope to get an even mix of being over and under and by small amounts. That would be good for your forecast, but you're never going to get all the numbers right. No one ever has. We'll check in with my co-host Loki, who is hidden behind that blanket. You can see the blanket rustling around a bit. So there must be a chihuahua behind it. There he is, right back there. He's doing that instead of, let me click away from that other screen with my notifications up. So, yeah, he's hanging out behind his blue blankie instead of eating his breakfast, which is what he ought to be doing. So, let me go back to my share desktop screen. And I can show you the next tweet in the 69 tweet thread. We're going to spend some time on this one because it's the income statement, right? This is the big enchilada of the forecast. So is that hard for you to read? Yes, definitely. That's too hard for you to read, so we're not going to show it to you that way. If you've got a high-def screen at home, you can click on that image and it'll show up fine for you. But since you're viewing me on YouTube on possibly your phone, what I'm going to do instead is bring up my earnings model. There it is. And I'll go over to the detailed model tab of my forecast, which is where you find this. And we'll just scroll right up to the section of my forecast that has the income statement. So right after the cost of sales percents section is where you will find the income statement. This is the same stuff you just saw on the chart. Now you don't care about 2018, 2019, and 2020. That was a long time ago. So I'll scroll over here and get to, you know, maybe 2020 and 2022, 2023, sorry. And I'll zoom in here some more. Let's make this big so you can see it. Oh, that's probably too big. I'm just going to drag this column over for a bit and see if this gets us the view we want. Yeah, that's okay. Well, maybe I'll scroll over a couple of columns. Okay, so now you've got 2022 Q3 and Q4, 2023 Q1, Q2, Q3, and Q4. However, I was supposed to have just said what I said. You're with me. All right, so here's what Tesla actually reported for Q1. These are actuals. Here's what I'm forecasting for Q2. This is my forecast, and so are these over here. And then I've scrolled a little bit too far. Let me see if I can drag this over just a little bit. There, that should allow me to click in this cell without moving the screen. Okay, so what are we looking at? Well, this is how Tesla will report their earnings in mid to late July when they report out Q2 earnings. And the first section of an income statement is the revenues section. Hey, what did we earn money doing? So in this section you see where Tesla has taken payment for services rendered and products sold to people. In any case in which Tesla has earned that revenue, they're allowed to declare the revenue. So that's what shows up here. Automotive sales, this is selling people cars, exactly the way you would expect. Leasing and resale revenue, this is revenue coming in from people who are on leases, who are not buying their car outright. They're making 3 years worth of payments, typically, on their car, and then giving it back to Tesla, who then sells the used Tesla. The used sales, by the way, hit this line, services and other. That's to make sure that you can look at the revenue per delivery and get a useful metric out of that without having to worry about the used vehicle mix. Only new vehicles count as deliveries. So, yeah, I've got this going up quite a lot. The number one driver of revenue growth here is units sold. Tesla's going to sell a lot more vehicles in Q2 than they did in Q1, is my forecast. And I don't think the revenue per vehicle sold is going to come down a lot. So that's how you get there with a favorable impact from volume that is not offset by an unfavorable impact from rate. We'll see what we get, but these are. I don't type these numbers in here. I used to years ago, like 4 or 5 years ago. I used to just the only page I had in my forecast model was the income statement. I would just type in numbers that looked right to me and forecast it that way. Use formulas in some cases, but mostly just eyeballing it, which is how a lot of people do their forecast, and saying, well, I think this number is going to go up by this, that number is going to go up by that. Well, now I have a very detailed backbone behind this that builds up to the numbers you see in this section. And if you stick around for the rest of my forecast review series, I'll get to those last. I'll get to the first 1,166 rows of this forecast model at the end. First, I'm going to tell you what time it is, and then I'll tell you how I made the clock. So what about energy generation and storage? I've got that going up by $1 billion. That's never happened before. What on earth could make that happen? Well, if you sell enough megapacks at $2 million a pop, you can do it. That's a big lift, and I'm expecting that to continue throughout the rest of the year as Tesla delivers record energy storage in terms of gigawatt hours sold, mostly to utility grade providers of electricity who need the megapacks as battery backup storage or so that they can decommission peaker plants, those sorts of things. Energy production that's only run some of the time. It's very costly to keep those in service, and it's a better idea to just retire them completely and sell off that land or whatever you want to do and have just battery backup storage instead. What about services and other here? I've got that going up as well by a much smaller amount, from about 1.8 billion to about 2.15 billion. So what's this do in total at the revenue line? I've got just over $30 billion. Now, am I going to be shocked if Tesla reports less than $30 billion? No. I expect for my forecast to miss on every one of these numbers. I just don't know by how much. Will I be shocked if they report a number higher than 30 billion? No. That's the midpoint of my expectation for what's going to happen in Q2 with, nearly a full quarter worth of production coming out of all of Tesla's factories. Shanghai, Fremont, Austin, and Berlin may all set all-time quarterly records for production and deliveries in Q2. China is going gangbusters, not just with production, but also with sales domestically. So we could have a much stronger quarter than the analysts are expecting. And that's what I have in my forecast. I don't see why it's not going to happen. We'll find out when Tesla reports. So then below that, we've got the cost of sales section. I've got this going up, of course, along with the sales. We've got the cost of sales going up by almost as much, about 4.2 billion worth of cost of sales growth here to go with about 5.4 billion worth of revenue growth. Then for leasing, I've got a very similar number here, just a little bit higher, same as the leasing revenue. For energy generation and storage, I've got a lot more costs coming in here. We heard from Zach during last quarter's earnings call that they're long-term targeting mid 20% gross margins for Tesla Energy. So Tesla Energy will not get there overnight. Services and other costs also going up by less than the revenue is going up by, so they should get a little bit more profitable. That's what's in my forecast for services and other. Then that yields total cost of sales as shown, and gross margin percent improving some. I've got it bouncing back from 19.3 to 20% in total. This is the all-in gross margin percent, just the total cost of sales and the total revenue. And I have 0 for a currency translation impact here because I'm so bad at trying to forecast currency translation impact. I get it wrong directionally sometimes. So the best way to not get it wrong directionally is to not forecast it at all. Then whatever it is will just hit here. And if you're in my audience and you know a great, solid way of forecasting currency translation impact, let me know in the comments. I'll be very happy to learn how to do that. Then we have research and development here. I'm forecasting that at about the same 0.8 billion it has been over the past 2 quarters. Then for SG&A, I have this increasing sum, so continuing at about the same pace it increased over the past 3 quarters, and for that to continue into the future. Then for restructuring and other, I'm not aware of any layoffs that happened at Tesla during Q1, so they may report 0 here. 0 is the most commonly reported number for restructuring and other if there weren't unusual items that would go on this line, such as separation expenses for layoffs, severance pay, that sort of thing. So what's that leave you with after operating expenses? That gives you your income or loss from operations, your operating profit. $2.664 billion was actually reported in Q1. I have that rising to a little over $4 billion in Q2 at a 13.5% operating margin. This line is the line Zach said he is managing the company to, and I have that improving in Q3 and Q4 as well as Tesla continues to ramp up production and deliveries and, you know, make more profit. Then we've got interest income here. So that was a pretty big number in Q1, bigger than it was in Q3 and Q4 of last year anyway. I have that trend continuing in my forecast for the rest of this year, with Tesla making more interest income at higher interest rates and with more of their cash deposited in interest-bearing investments. So the interest expense number has been getting smaller, and I'm forecasting that to continue for the rest of the year as Tesla has less debt outstanding to pay interest on. And then you've got an other income expense line here. This is a very tricky one to forecast. I've got 0.044 in here. It is positive sometimes. If I scroll back, you'll see most of the time this is a positive number. It just happens to have been negative the last 3 quarters running, but I'm forecasting positive numbers here, you know, but small amounts, not big money here. So after adjusting the income or loss from operations for these 3 items, that gets you to this number, the EBIT, the earnings before income tax. After that comes the income taxes. So I do have some money in here. You can see my formula in the formula bar here. This means something to me. It may not mean anything to you. But I do have some money in here. Let's see how much. About 10 cents per share worth of deferred tax asset flowing through. Tesla had about 45 cents per share worth of that, and they declared 21 cents in Q4 and 1 cent in Q1. I've got them declaring the remaining 20 cents evenly across the next 2 quarters and then being done with that forever. But if they don't declare any of it, you'll see a bigger number here on the provision for income tax expense. This number is being reduced by a decent chunk of change, by $300 million or so. I'm trying to do the math in my head. So then we have the net income or loss here after paying taxes, prepaying income tax, corporate income tax. Then there's a net income or loss attributable to non-controlling interests here that I forecast as just the average of what it's been over the trailing 4 quarters, because I don't have a good method for forecasting this number, so I've got a small number there. Leaving me with GAAP net income of just over $4 billion, $4.15 billion worth of GAAP net income. So how many shares will Tesla have outstanding at that point? I'm forecasting 3.172 billion total shares of Tesla outstanding, with 3.474 billion shares diluted if you include, mostly this is the stock-based compensation for Elon that has vested for him, so it's available for him to buy stock at a discounted price, but he hasn't done that yet. He has until March 20th, 2028 to execute those options. So a little bit of time left for him to purchase that Tesla stock. And then once he does, he has to hold it for a minimum of 5 years before he's allowed to sell it. So if you believe these share counts, then you believe these earnings per share accounts correspond to the forecast above, making $1.31 of GAAP EPS, $1.19 worth of GAAP EPS diluted. So this one's the basic. You don't really see anybody using that number. This $1.19 is the one that you would see somebody report. Or if they want to throw out that deferred tax asset, it would be $1.09. I don't see lots of people making this adjustment to throw out the one-time tax benefit, but it's legit for you to do that math. And that is as good a place as any to end this week's episode. I think row 1202 is where this exhibit cuts off. I've got one more row on here, but I think I'll save it for the next video. This one's been long enough already on the income statement. So with that, I will outro after checking in with the big blue blanket Loki has put up in front of himself. And I'll say, if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel over here and click the notification bell to be alerted whenever I post fresh content. Thank you to everyone who supports me on Patreon or on Twitter or on YouTube, especially my executive producers, Kathy Kitchler and Rebellionaire.com, and I'll see you in the next one.